Namaste, friends. Let's start understanding more on the salaries chapter. So what we have seen is something like this. We have seen 12 different perquisites. 12 different perquisites. Rent-free or concessional rental accommodation, interest-free or concessional interest loan, monetary obligation of employee met by employer, usage of movable asset, transfer of movable asset, gift, lunch, ESOP, um, educational facility, medical facility, leave travel concession, and motor car. 12 different perquisites and its basis of valuation is what we have completed. We categorize the salaries into 5: general, allowances, perquisites, terminal benefits, profit in lieu of salary. Okay, this is what is perquisites are all about. But as an extension of the discussion, we are going to discuss two different topics. As an extension so that it becomes more clear to you about it is neither a perquisite, it falls in between perquisite and the terminal benefit. So I'm taking it up here. Okay. The heading is Provident Fund. Neither a perquisite, so it's a separate heading. I can't call it as perquisite, I can't call it as terminal benefit. It has both aspects. Provident Fund. Friends, this is a welfare scheme, or we also call it as compulsory savings scheme. What is Provident Fund? Compulsory savings scheme. Suppose you are my employee, I employ you, and you are eligible for a salary of 20,000. A percentage of salary, let us take 10%, 2,000 rupees, I will not pay you. I will deduct from your salary. Understand the case. You are eligible for a salary of 20,000, but I am only paying you 18,000. 2,000 I am deducting and depositing it in the Provident Fund account in your name. It belongs to you. And deposit, it's a compulsory saving. So depositing 2,000 in your name. Matching means equal. Equal contribution is made by me also. So your 2,000, my 2,000. I am also contributing. The employer also contributes 2,000. 4,000. And Provident Fund keeps crediting interest. It's like a recurring deposit. They compute the interest and keep crediting it. So that after 20, 30 years of service, when you retire, you will get some 20, 25 lakh lump sum so that your post-retirement life can be peaceful. The intention, I hope the class is getting the intention. The employer deducts a percentage from employee's salary and deposits it in the Provident Fund account of the employee. A matching, which means equal contribution, is made by employer. Fund credits interest, and at the end of his, it can be retirement or resignation. At the time of leaving employment, the employee will get a lump sum so that he can be better off. This is known as Provident Fund. Okay, this is a compulsory savings scheme. Under this scheme, a percentage of salary is deducted from the employee and remitted into PF account. Matching contribution is made by employer. Fund credits interest from time to time. At the time of leaving employment, employee gets the lump sum. At the time of leaving employment, employee will get the lump sum, my dear friends. At the time of leaving employment, employee will get the lump sum quantum. So there are four components. Employee's contribution, employer's contribution, interest, lump sum. There are four components in a provident fund scheme: employer's contribution, employee's contribution, interest credited by fund, and the lump sum received at the time of leaving employment, which can be resignation or retirement. Okay. There are three types of provident fund. There are three types of provident fund: statutory provident fund, recognized provident fund, and unrecognized provident fund. Statutory provident fund, recognized provident fund, and unrecognized provident fund. Okay, okay, right? There are three types of funds, four different components. Friends, please understand, take your time to understand, but how I want to write in your notebook is there will be four columns: particulars, statutory provident fund, recognized provident fund, unrecognized provident fund. Okay, four columns, my dear friends. The three funds are statutory PF, recognized PF, unrecognized PF. Okay, we call in short as SPF, RPF, URPF. Okay, particulars, SPF, RPF, URPF, statutory provident fund, recognized provident. Okay, I cannot do write like that in the Excel. In the Excel, it will be in the notes, but in notebook, if it is so, you will easily catch up with the concept. Particulars, the first column, all are equal columns, don't worry. Okay, statutory provident fund, recognized provident fund, unrecognized provident fund. The abbreviations also, if you want, you can write it there itself: SPF, RPF, URPF. Please don't look at the Excel. Excel will finally be clear to you. Now your notebook is my key point in writing. In your particulars column, nature. In your particulars column, nature. Hyphen, hyphen, for government, sorry, in your particulars column nature, in statutory provident fund for government employees. In recognized provident fund, okay, in the against the nature column, in the recognized provident fund, approved by Commissioner of Income Tax, approved by Commissioner of Income Tax. In unrecognized provident fund, unapproved, unapproved. Okay, friends, I am repeating. Okay, in recognize, in sorry, sorry. So repeating, in your particulars, you will have nature in SPF column for government employees, RPF column for approved by Commissioner of Income Tax, URPF column unapproved. Employees contribution. In the particulars, employees contribution. In the particulars column, employees contribution. Simran, are you there?
Yes, sir.
Simran, the salary for you is 20,000 per month. I am reducing 2,000 from your salary and depositing it in your name in the PF account. Okay? Is now your taxable salary 20,000 or 18,000?
18, sir.
No, friend. That 2,000 also comes to you only. I am not deducting that 2,000 and keeping it to myself. That 2,000 also comes to me you only. So you are taxable only for the gross salary. You are
So
taxable
whole,
only
whole 20,000 it
the
will be
whole
taxed.
20,000. Exactly. Friends, employees' contribution is always part of the salary, taxable on gross basis. Taxable on gross basis. This is, you are given 20,000. I deducted 2,000. I did not retain it. I gave it to you back in some other shape. I gave it to you back in some other shape. In the sense, I ensured that I deposited that money in your name in the PF account. So taxable on gross salary. However, okay, deduction under section 80C can be claimed. Write it fully in your and the column. In that particular column, please write it neatly. However, deduction under section 80C can be claimed. We will talk about this deduction in July. Okay, but as of now, please understand, taxable as gross salary. However, deduction under section 80C can be claimed. Similarly, for RPF also the same. Taxable as gross salary. Please write it again. Just a minute. Class முடிஞ்சோன்னு உங்களுக்கு phone பண்ணுறேன். Please write the same. Taxable as gross salary. Deduction under section 80C can be claimed. In URPF column, taxable under gross salary. However, no deduction can be claimed. However, no deduction. You cannot claim any deduction. Employer's contribution. Employer's contribution. In the particulars column, employer's contribution. In the particulars column, employer's contribution. In our SPF column, exempt. In our SPF column, exempt. In our RPF column, please remember, exempt up to 12% of salary. Okay? Exempt up to 12% of salary. Okay? Exempt up to 12% of salary. Sir, a week back, the finance minister was announcing that to benefit people with more money, Provident Fund contribution is reduced from 12% to 10%. Will it have an impact? It will not have an impact for your examination. It is only for the financial year 21-22. Financial year 2021. Financial year 2021, assessment year 21-22. It is not for financial year 19-20. So whatever you study, you good understanding, good learning, but don't worry, it is not for your examination. So worry not. So employer's contribution exempt up to 12% of salary. There itself, please write down. There itself, please write down, salary is equal to basic pay plus DA forming part plus commission as a fixed percentage of turnover. Commission as a fixed percentage of turnover. Salary is equal to basic pay plus DA forming part plus commission as a fixed percentage of turnover. Employer's contribution. Similarly, in URPF, employer's contribution not taxable at the time of contribution. I'm not saying not at all taxable. Wait, you will understand. Now, as of now, in that column, you would have written not taxable at the time of contribution. Not taxable at the time of contribution. Interest creditor. Interest creditor. In the particulars column, interest creditor. For SPF, exempt. For SPF, exempt. For RPF, exempt up to 9.5%. Exempt up to 9.5%. For URPF, not taxable at the time of credit. Not taxable at the time of credit. Fourth component, lump sum received. Lump sum received. My dear friends, fourth component, lump sum received. In the case of SPF, exempt. In the case of RPF, exempt, provided employee completes 5 years of continuous service. Okay, at least you should have worked for 5 years so that you can claim it for exemption. Exempt, provided employee completes 5 years of continuous service. Lump sum received for in your URPF column, taxable. Now here I am going to go little elaborate. You can put an asterisk mark and write it down if you want. You can put taxable asterisk mark and write it down, or there itself, depending upon your page capability, you can decide that. Taxable. What is taxable? What is that lump sum? What is that lump sum? That lump sum has 4 parts. Employees' contribution, employer's contribution, interest on employees' contribution, interest on employer's contribution. All these 4 things is put together known as lump sum received. I am repeating. What is meant by lump sum? What is that Provident Fund gives me back? Gives me back 4 things. I contributed some money, they are giving me back that, and the interest for that. My employer contributed some money, they are giving it back, and the interest for that. So, employees' contribution, employer's contribution, interest on employees' contribution, interest on employer's contribution, put together is known as lump sum. Have I already taxed the employee's contribution? The answer is yes. I received itself, I taxed it. Can you again tax it? The answer is no. So taxable after that we are writing. Employee's contribution is not taxable. Whereas employer contribution, interest on employer contribution is taxable as salary. Interest on employee contribution is taxable under other sources. Repeating, lump sum received in the case of URPF, unrecognized provident fund, it is taxable, but the component split. Employees' contribution you cannot tax, you have already taxed it. Employer contribution and interest on employer contribution is taxable as salary, whereas interest on employee contribution is taxable under, not under salary, but under some other head called other sources. Close your box, read your box once.
RPF interest credited.
Once more.
Uh, Under RPF interest credited, exempt up to 9.5 percentage is the percentage on the amount of interest.
Exempt up to 9.5%.
That percentage is on the amount of interest. Right?
Amount of deposit.
Amount of deposit.
1 lakh you deposited, 9,500 rupees is exempt.
So can you show below?
Are you clear, friends? Are you clear? Okay. So this is how URPF. URPF can be also a theory question. Write short notes on taxability of URPF, but otherwise what you have to remember is only this 9.5%. Pension fund. Pension fund, like Provident fund, this is also employer-employee contribution, but not so many types, only one, so not a problem. Okay. Employees contribution. Employees contribution taxable as gross salary. However, deduction under section 80C can be claimed. Employees contribution, it is taxable as gross salary. You can claim deduction under section 80C. Employers contribution, taxable as gross salary. I mean it, taxable as gross salary. However, deduction under section 80 CCD can be claimed. Taxable as gross salary. However, deduction under section 80 CCD can be claimed. Only two things here. Employees contribution, employer, there is no interest and all. Employees contribution, employers contribution. So, Provident fund and pension fund. That leads us, that takes us to the fourth variety, my dear friends, to the fourth category, which is terminal benefits. Okay, category 4, terminal benefits. Category 4, terminal benefits. These are provided by an employer to an employee at the time of leaving employment. Terminal means last payments. Okay, these are monetary benefit provided by an employer to an employee at the time of leaving employment or after that. Okay, these are monetary benefits provided by an employer to an employee at the time of leaving employment or even after that they might be paying. These are known as terminal benefit. Okay, the first and the most important terminal benefit. Terminal benefit number 1, gratuity. Gratuity. Terminal benefit number 1, gratuity. Gratuity. The word gratuity is derived from the word gratitude. The word gratuity is derived from the word gratitude. Gratuitous payment, thank-giving payment. Boss, thanks for working with me for so long. We are very happy that you have been working with me for so long. Gratuitous payment at the time of leaving employment. Gratuitous payment at the time of leaving employment. Okay, gratuitous payment at the time of leaving employment. That's what is gratuity. Section 10, subsection 10, okay, consists of exemptions from gratuity. Section 10, subsection 10 consists of exemptions available from gratuity. Okay, okay. Gratuity paid to an government employee. Gratuity paid to a government employee is wholly exempt from tax. Gratuity paid to a government employee, my dear friends, zero, completely exempt. Gratuity paid to a government employee is fully exempt from tax. Okay, let me call this as 1. The next is gratuity to employees covered under Payment of Gratuity Act. Okay, gratuity for employees covered under Payment of Gratuity Act. Gratuity for employees covered under Payment of Gratuity Act. According to section 10, subsection 10, minimum of the following is exempt. According to section 10, subsection 10, minimum of the following, whichever is less, minimum of the following is exempt. Actual gratuity received. Actual gratuity received. 15 days salary for every completed year of service or part thereof in excess of 6 months. 15 days salary for every completed year of service or part thereof in excess of 6 months. Maximum limit of rupees 20 lakhs. Maximum limit of rupees 20 lakhs. Minimum of the following three is exempt. Actual gratuity received, 15 days salary for every completed year of service or part thereof in excess of 6 months, maximum limit of rupees 20 lakhs. Under that, write explanation to condition B. Nothing but this is A, this is B, this is C. A is simple, actual receipt. C is also very simple, 20 lakhs. B, we need to understand. Explanation to condition B. Explanation to condition B. I am reading every word of it. 15 days. It's a formula. Under that you are writing explanation to condition B. Under that you are writing 15 by 26. Why 26? In a month of 30 days, 4 Sundays are excluded always. 26 is the effective working days. 15 days. So 15 divided by 26 into last drawn salary. 15 days salary. So 15 by 26 into last drawn salary for every completed year of service or part thereof in excess of 6 months. Repeat. For every completed year of service or part thereof in excess of 6 months. Aditi, unmute, no?
Yes, sir.
Somebody serves 15 years, 4 months.
Okay, sir.
I will take.
15 years.
Somebody completes 15 years, 8 months.
16 years.
That's beautiful. That is what this or part thereof in excess of 6 months. 6 months above, you round off to the higher side. Up to 6 months, round off to the lower side. This is the way law will tell round off. It cannot just like that in a casual English tone, it cannot say nearest number round off. Look at the word, the way law interprets round off, because all through income tax law you will find this or part thereof, or part thereof. Or part thereof means round off, boss. How to round off? Every completed year of service or part thereof in excess of 6 months, round up to the top side. As our friend was saying, 15 years, 8 months, 16 years. 15 years, 4 months, 5 months, even up to 6 months, lower end. Okay, so into last drawn salary, into completed years of service, rounded off. Completed years of service, rounded off. Explanation to condition B. As a formula, if I write it down, 15 by 26 into last drawn salary into completed years of service, rounded off. And that takes us to the definition of what is salary. Is equal to basic pay plus full DA. Not farming part, all DA. Full DA. Read through. And in question number 19 in page number 54. I'm in question number 19 in page number 54, my dear friends. Question number 19, page number 54. Sudhar retired from Mamekam Limited after serving for 32 years and 4 months. His basic pay at the time of retirement 22,500 and he was entitled to a gratuity of 11,90,000. Compute exempt and taxable part A, and then there is a part B also. First the part A, read through. Gratuity received. Friends, gratuity received 11,90,000. 11,90,000 less exempt under section 10 subsection 10. Actual received nothing but 11,90,000. Understand the second as a formula 15 by 26 into 22,500 into, he has completed 32 years and 4 months, so I will take 32. Okay. 4,15,385. 415,385. Maximum limit 20 lakhs. Whichever is minimum goes to the outer column. Whichever is minimum goes to the outer column. That is the amount of exemption. Taxable gratuity. $774,615. 774,615. So the second condition is 15 by 26 into 22,500 into 32 years of complete. Any doubts? Ask me. Part B and question number 20. Please try it. Part B and question number 20. Please try it. Part B and question number 20. I have to make a call. I'll make and come, please. Just keep trying. Sorry, friends, I'm just back. Sorry, friends, I'm just back. You have the answers?
Sir, for P1, 172,692.
Okay,
And 20th question, no tax, sir.
no tax. Okay. Any other answer?
Sir,
Go ahead.
so what is the difference between exemption and deduction, sir?
Long time, long time. We will do it. We'll do it. You are yet to
Oh,
see deduction, so please wait. You will understand.
okay.
I'm also getting the answers which Darshit gave us. If you have a different answer, please let me know. Whatever questions that I am leaving, it is your duty to answer it today. I'll come to that. I'll come to that entire working now. How we are going to do that. Now back to your theory notebook. Back to your theory notebook. Roman 3, gratuity for employees not covered under Payment of Gratuity Act. Gratuity for employees not covered under Payment of Gratuity Act. Gratuity for employees not covered under Payment of Gratuity Act. Minimum of the following is exempt. Minimum of the following is exempt. A. Actual received. B. Half a month average salary for every completed year of service. Repeating, half a month average salary. Half a month average salary for every completed year of service. Half a month average salary for every completed year of service. C. C. Maximum limit of rupees 20 lakhs. Maximum limit of rupees 20 lakhs. Repeating, my dear friends, for gratuity for employees not covered under POGA, not covered under POGA, minimum of the following three is exempt. Actual gratuity received, half a month average salary for every completed year of service, maximum limit of rupees 20 lakhs. On an apparent 1 and 3 are the same or very easy to understand. On an apparent reading, the second will look like what we have already done and as covered under POGA. But when we look at the formula, it is very different. So under that again, explanation to condition B. Explanation to condition B. Friends, as a formula I am writing, it starts with the word half a month, 15 by 30, 1 by 2. Half a month into average salary. Half a month average salary for every completed year, and the round of provision is not there, or thereof in excess of 6 months is not there. So only completed year. Even if I complete 15 years, 11 months, 15 days, I can only take 15 years. Only completed years can be taken, okay, into completed years of service only. Okay, into completed years of service only. 15 by 30 into average salary into completed years of service only. So you can see the difference. That leads us to the question of what is meant by average salary. What is meant by average salary? Average of last 10 months salary preceding the month of leaving employment. Average of last 10 months salary preceding the month of leaving employment. Sir, a person leaves employment, let us take on August 10th. A person leaves employment, let us take on August 10th. To complete average salary, I will leave August. The law says preceding the month of leaving. So the month of leaving should be left off. So I will not take August. I will take the salary of July, June, May, April, March, Feb, Jan, December, November, October. This 10 months I will take and compute the average. Average salary means average of last 10 months preceding the month of employment, leaving employment. So leave that month and past the 10 months take. Having said this, suppose if a person leaves on 31st of August, I will take 31st August also. I will take August also. If he leaves in between a month, I will leave that month and calculate back. If he leaves on the last day of the month, I will take that month also. You can ask me what is the logic, sir? You just said preceding, but now you are saying on 31st of August, if he is leaving employment, take 31st of August also. There is a logic. If a person retires or resigns on 31st August, he is not in employment from 1st September, not from 31st August. I am repeating. If a person is leaving employment on 10th of August, from 11th August he will not attend office. Till 10th August, he will attend office. Similarly, if a person is leaving employment, resigning or retirement on 31st of August, till 31st of August evening, he will be in employment. Only from 1st September, he will not be in employment. So what I have to leave is only September. So I will take August also. That's logic. That is the logic of, okay. So either you go by logic or you can understand it. If he is resigning on the last date, take that date also. Take that month also. Last day of the month, take it. If he is leaving in between a month, leave that month, go back for 10 months. Average of last 10 months salary preceding the month of leaving employment. Salary means basic pay plus DA forming part plus commission as a fixed percentage of salary, of turnover, sorry. A small change in the wordings, a huge difference in the calculation. How? There 15 by 26, here 15 by 30. There last drawn salary, here average salary. There it is completed years of service rounded off. Here it is only completed year of service. There salary means basic pay plus full DA. Here salary means basic pay plus DA forming part plus commission as a fixed percentage of turnover. Average salary means salary of last 10 months preceding the month of leaving employment. If it is last date, I will take that month also. If it is in between, I will leave that month and take the past 10 months. Any doubt, ask me.
So why we put 15 by 26 there, sir? Because 4 days of holidays.
4 Sundays should be excluded.
And here also we'll have
The law says half a month salary. The wording used is half.
oh, okay, sir.
Yeah. Actually, I answered our friend's question. I definitely will answer this and whatever questions you have. But actually, the question diverted to Charanya. Okay? Ask her in the next class, why is your gratuity law not giving that 4-day benefit to a person who is in the higher income group? A person who is covered under Gratuity Act is those factory law. Gratuity law comes as part of industrial and factory law. So those laborers, etc. Not covered under gratuity law is that the higher level employment. So ask Charanya ma'am that why the law is not fair enough to people. It should be fair to all, means let them all give 15. Same formula should only be there. Why there should be two different formulas? And she will blame the income tax law for it. Income tax law is not to be blamed. Okay. ராம்குமார் உனக்கு தான் இந்த அசைன்மெண்ட் சார். நான் வரவே இல்லை சார் அவங்களோட. Okay friends, okay, patiently we will try to understand the practical aspect of it. Question number 22 in page number 55. Question number 22 in page number 55. Shantanu retired after serving 29 years and 11 months. On retirement, he received a gratuity of 1480 compute exempt and taxable. 1 minute. 1 minute back to your theory notebook. 1 minute back to your theory notebook, please. Note, if the question is silent, then employee is not covered under POGA, under Payment of Gratuity Act. If the question is silent, then the employee is not covered under Payment of Gratuity Act. Shantanu retired after serving for 29 years and 11 months. Back to your practical notebook. On retirement, he received a gratuity of 1480. Compute exempt and taxable in each of the following cases. Case A. His basic pay on an average for last 10 months, 48,800. Question number 22. Gratuity received 14 lakh 80,000. 14 lakh 80,000. Gratuity received 14 lakh 80,000 less exempt under section 10 subsection 10. Friends, exempt under section 10, that is also correct. If you don't remember the subsection, nothing wrong. You can write exempt under section 10. If you are very sure, section 10:10. If you forget the section 10 also, less exemption is fine. Is also fine. The examination is not testing your memory power. It is testing your understanding ability. So, if suppose you forgot that it is exempt under 10. If you remember 10:10, okay, we are going to do many things in classroom. Probably you will remember, it will strike. Otherwise, you all know that exemption is always in 10. So, exemption under 10 or less exempt. Anything is okay. Less exempt under 41. Okay, that is what will irritate the examiner. Okay, if you don't know, there is nothing wrong in saying, boss, I don't know. And they will not mind you. It is only your understanding ability is being tested. Just because somebody writes a section number correct and the provision wrong, he will not get marks. Whereas a person who is not writing the section number but writes the provision will stand will tall in terms of marks. But to a larger extent, in the classroom, we will practice. In the examination. Okay. If you don't think that I am speaking out of my ahambhavam, okay. So, in the examination, my voice will be heard inside you. Don't worry. Actual received, okay, 14 lakh 80,000. 15 by 30, you can write 1 by 2 also, into his average pay for the last 10 months, 48,800 into, okay, Santanu retired after serving for 29 years, 11 months. So, only completed years of service should be taken 29. Repeating, 15 by 30 into average salary 48,800 into number of years of service 29. I hope this is clear. Case B. His basic pay at the time of retirement 80,000. DA forming part of basic pay 30%, and they remain the constant, which means the average is also the same. If they remain the constant, it technically means the average is also the same. I'm taking the Excel advantage, but please write down. Please write down. Nothing wrong. Spend your time. So, my dear friends, 15 by 30 into 80,000 basic pay plus 30% of 80,000. 30% of 80,000, 24,000 is the DA forming part. Is the DA forming part. 24,000 is the DA forming part. I'm getting the full gratuity as exempt. I'm getting the full gratuity as exempt. I want your understanding in the third case. First listen, understand, and then we can do. Case C. His basic pay at the time of retirement 54,000. His last increment was 5 months before, which is 4,000 per month. His DA was 50% of basic pay, 80% of DA forms part. His basic pay at the time of retirement was 54,000. His last increments 5 months before was 4,000 per month. So 5 months before he was drawing only 50,000. The last 5 months only its salary has become 54,000 per month. Before that it was only 50,000. Kanimoli, can you unmute? Sneha, can you unmute? Or Ritanya, can you unmute Ritanya?
Yes,
How many months salary we will take for average salary?
so 10 months preceding
10.
the day,
We need 10 months. His basic pay for the last 5 months is
54,000,
per month. And before that his basic pay would have been only
50,000.
okay, right? So we thanks friend. Okay, so friends, case C. Okay, computation of average salary. Basic pay, my dear friends, just now Ritanya was saying, can you just confirm me whether you understand this? 54,000 into 5. plus 50,000 into 5 divided by 10. Any doubt, please ask me. Average of last 10 months. Last 5 months, he was getting 54,000 per month. Because 5 months back, he had an increment of 4,000, which means technically 5 months back, his salary was only 50,000 per month. So, okay, 54,000 into 5 plus 50,000 into 5 divided by 10. Is this his average basic pay? Actually, sorry. Kindly excuse me. I made a mistake. Okay, I should not put 10 here. Sorry. I should not put 10 here. Okay, because DA is also there. I'm sorry. Okay, friends, just 54,000 into 5 because I'm only doing basic pay. After that, DA is also there. Then I will 5,20,000. 5,20,000 is his basic pay for 10 months. His basic pay for 10 months is 5,20,000. DA, the question says 50% of basic pay, of which 80% forms part. So 5,20,000 into 50% into 80%. 5,20,000 into 50% into 80% is my DA. Repeating, basic pay 54,000 into 5 plus 50,000 into 5. For last 10 months, this would have been his basic pay. DA 520 into 50% into 80%, 20 lakh, 2 lakh 8,000. Total salary is 7,28,000. Average salary is 72,800. Average salary is 72,800. Anybody not getting this? Please ask me.
Sir,
Go ahead.
so 5 months before retirement means it will include the retiring month also, or the
Because he is retiring on the last date. Because he has received full month salary. That's why he is retiring on the last date.
so or else we have to make it as 54 into 4 and 50.
Yeah, 54 into 4 and plus 50,000 to 6. Wonderful understanding. Yeah. So now if I go for exemption, the second condition will become, okay, into 72,800 into 72,800. I hope this is clear to you, all of you. I hope this is clear to all of you. This is how we will compute the average salary and then the normal exemption formulas. Question is yours, my dear friends. Mrs. Satyavati retired as an executive on 30th November. So take November also. Take November also because it is the last date. Okay. Read the question very patiently and start doing it. Read the question very patiently and start doing it.
Nine 175.
49,175. Okay. Just 49,175. Aishwarya?
Taxable is 49,175. Average salary got it as 49,850.
தப்பா சொல்றப்ப taxable. கரெக்டா மைனஸ் பண்ணல பாரு.
Okay. 4,97,175.
Any other answers? This is how I am getting it. Raja Kojon, you check your average salary where you went wrong.
Sir, I took 36,000 as Feb to June, sir.
36,000 as? First,
Feb to June.
okay. This is how the answer works out. The first 5 months, it should have been 28,000. Next 5 months, 36,000. This is the basic pay. DA and commission as to a larger extent constant, giving us an average salary of 49,850. And our taxable gratuity comes to 4,97,175. 4,97,175. Okay. Okay, as I told you, this will be a shorter session, so I'm winding up now. I need to go to the institute. There is some foundation course meeting, so I need to go to the institute. So friends, I will meet you tomorrow morning. Meanwhile, I have a very important task for you for the any time during the day. You can complete this. That is question number 18, which consists of all the perquisites, my dear friend. By doing question number 18, you will become strong in perquisite. By doing question number 18, you will become very strong in perquisite. Take a fresh paper, do it and send it to me. Send it to me, please. Okay, the answers also I have kept it ready. I will post it later. But I want you to sincerely take an effort and complete question number 18 today, so that tomorrow when we start you are very sure about perquisite, or if at all you have a doubt you can ask me about okay, something very interesting perquisites are there over there. So please take your time, spend your time either. It will take some 25 minutes to half an hour. And one more question in P covered under POGA, the Draupadi question is there. Okay, please complete both these things. We will meet tomorrow morning 6:30 a.m. Tomorrow morning, tomorrow onwards, I can come back at 6:30. So 6:30 a.m. tomorrow morning, we are meeting. Again, we have 2 sessions tomorrow, and we will be going to complete all the preliminary requirements tomorrow morning with regard to salary. Meet you tomorrow morning at 6:30. But meanwhile, before tonight, please, all of you, last time itself, majority of you were showing interest and sending me the answers. And if I ask you to correct, you were correcting. Some of you were not responding. I want to tell you something. I know you are also here for learning. If you do a mistake, there is nothing wrong. That's what I want to be very loud and clear. We are here to learn. If I teach you whatever you know, I am not doing justice to you. Only if I teach something new to you, and mine with regard to tax is a trial and error method. I make you do a mistake and try to correct that mistake, so that for lifelong you will never do that mistake again. You will always remember, yes. So today when you did that, when you read a line and found usage and transfer in a single line, if you have done, those who have done the mistake, if you talk to them, they'll tell you, no, henceforth I have to read. Okay, nothing wrong. Only thing is, it's your mindset which should not stop you from interacting with me. Please take your time, interact, do all the solutions and send it to me. Meet you tomorrow morning by 6:30 a.m. All the best.